Most of the time you hear people say that you should avoid trading gold, USD, NASDAQ. That is if you are a beginner and if you don't have enough capital trading those pairs, and I believe most brokers also do not recommend you to trade those pairs if your capital is not that good. All right, so in today's video I want to show you that you can trade those pairs and how you can minimize the losses as tiny as possible. All right, I'm going to show you when to take the trades and how you can take them trades. All right, so let me show you. This is gold, for example. All right, so first things first, of course, we need to do our analysis, and right now I'm talking to the beginners. All right, those who don't have the capitals, enough capital or enough margin or enough equity, to trade this type of pair. I'm talking about NASDAQ, USD, and gold trade. Right, because this pair, they are very, very volatile, and for a good entry, to avoid stop out, probably you might be risking 50 pips or 100, but remember, gold can take you the 100 pips stop loss or 50 pips stop loss, then go to your anticipated direction. And I believe if your balance is not that good, 50 pips, 100 pips, that's a big blow to your account. All right, so I'm going to show you how you can take those trades and have the minimum stop loss possible. All right, so like I said before, we do start our analysis whichever based on the daily. Right, so if we start our analysis based on the daily, for example, this is gold. We see right over here we are in an uptrend currently. Right, we have a high right here and a higher low, so definitely we are anticipating a higher high. In respect to this trend right here, we had a first tie right here, and we had a second tie right here, and right here we have a anticipated third tie right there. Okay, now gold is crazy, right? So you need to make sure that your analysis is very good. Okay, don't go against the trend for you to survive on this gold trade, or NASDAQ or even USD. But then today let's talk about gold. Okay, make sure that you are moving in the right direction. If the daily is talking about buy, we are going to look for buy strictly. I don't want to say, okay, let's scalp, we have a pullback, let's scalp, this sell, then of course take that buy. No, specifically buys. All right, and if the market is talking about sales, specifically sales. Okay, all right, so over here we had this as a correction phase, right? So based on this daily time frame, talk about patterns, right? Because I said, if you want to be good in forex trading, guys, make sure that you learn about all strategy in this market, whether it's an SMC, ICT, trend line, you need to learn about reversals, something like that. So when we see this right here, this is an inverse head and shoulder, so your eyes need to be sharp too. This is a left shoulder right here, this is the head, and of course neckline, and guess what? That is the right shoulder, and we see the market went up. That is another confluence, guys. Remember, we said we are in an uptrend. Gold is giving us high and high low, so we're just adding confluence so that we catch this move at the right time. Remember, we are going to catch this. Let me give you a secret. Come close at the 1 minute, right? So that is it. We're going to cut this entry at the 1 minute, but our analysis is based on the higher time, right? So first things first, like I said before, adding more confluence. So if we have this as the inverse head and shoulder, that's another confluence to tell us that now our bias for buys is valid. So let's go to the 4 hour and continue looking for opportunities, levels that price might respect. You understand? I'm talking about key levels, demand and supply zone. You see, we're back to that. ICT, SMC. You understand? So sorry. So over here, over here we see, in fact, let me just have this right here. I'm going to explain this trade, how I took the trade and how I'm still running that trade. You understand? So oh yeah, seems like my trading view has expired though. Anyway, I'll pay for that later. So so one thing I say, guys, if you see an inverse head and shoulder, do hide the left shoulder. That's a free secret I'm giving you. Most articles say when you see inverse head and shoulder or head and shoulder, wait for market to break out of a neckline, that's when you take your entry. But guess what? The moment you take your entry on the neckline, I'm talking about this as neckline right here, right there. So the moment you take your entry on the neckline, then you see the market or price pulling back. So I'm talking about the people who took the buy right here after the market took out this neckline. So you see the market, pull back, but I keep on saying higher the left shoulder, and then when you hide the left shoulder, of course you're going to see the market just giving you a new structure, high, low. So guess what? We had a high right here, high, low, and now high. So that means you took your entry on the higher high. So who are you going to blame? Taking your entry on the highest high? Are you crazy? And we're looking for buys, so definitely you're going to be stopped out, but I'm here to help you. Let's continue. Right, so we had a higher high right here, higher low, higher high, and guess what? Boom, boom, we saw this kind of a push or a play. That is a bullish flag. Patterns, you need to be good in patterns, right? Let me take you to the 1 hour. Guys, this applies in all pairs, whether it's USD, Nasdaq. So take it as I'm telling you guys. Be keen. So yeah, this is what we have on the H1, right? So this is it. Remember, you took your entry right here. Then you're like, why is that anytime I take my buy, then the market sells, and if I take my sell, the market buys? So I think you just need to understand the market moves and the structures, and like I said before, you need to be good in like every strategy in this forex market, right? Not even if you're trading SMC, don't stick to SMC only. Even if you're trading trend line, don't stick to trend lines only, right? Yeah, I'm a trend trader, but it doesn't mean that the moment the market hits my trends, I'm taking a buy or I'm taking a sell. No, there are certain strategies that I need to put in place, whether it's an SMC, whether it's an ICT, candlestick, type of a strategy, whether it's a reversal structure, continuation pattern, such things, like you need to have those things, incorporated in the real market, right? So right over here, we saw this bullish flag. Like I said before, this is a bullish flag, right? So the moment we see a bullish flag, that means that the price is, trying to gather the bullish momentum. Price is accumulating, you understand, for that bullish momentum or that bullish push. Remember, from the daily perspective, we anticipate a buy, right? So, and as we go to the 15, guys, let me hit the 15. Remember, I said no reversal, no trade, right? Right over here. So gold is crazy, gold is tricky, and gold is manipulative. And trust me, I believe, was it yesterday or the other day, gold tricked people that this is a left shoulder, this is the head, and now she gave a right shoulder, then boom, she dropped, right? But that if you were trading only patterns, or reversal patterns, you saw head and shoulder, and you're like, okay, I'm taking this entry. You understand? So you saw that is why you got tricked out. But me, I said, okay, I know my analysis based on the higher time frame. I know what's happening. Generally, the thing that most people are saying that, oh, that's a head and shoulder, I'm seeing that as a continuation pattern, a bullish flag. Yeah, that's a bullish flag in the formation. So this is how I interpreted, and then I said, okay, left shoulder for me, head. Then I say the moment she hits this trend line of mine, then definitely she's gonna pull back to give me a right shoulder, and then she continued dropping, right? So another thing, if you are anticipating an inverse head and shoulder or a head and shoulder, and then you see price interfering with that structure, over here we were anticipating the inverse head and shoulder, but then you see the market continue dropping. Once the market drops, it doesn't mean that the market is going to change its direction. It doesn't mean that we were looking for inverse head and shoulder, but then the market keeps on dropping. So it doesn't mean that that is invalid. If we don't see an inverse head and shoulder, we should be looking for a double bottom. If we were talking about head and shoulder, and then you see the market continue going up, then interfering about our head and shoulder, it doesn't mean that we are changing direction. The market probably is going to give us a double top. That's when we get the best price. I do call it a best price, and that is where you execute, right? So you see the market drop, and guess what? Gave us a double bottom right here. Boom. Sorry, right over here. Come on, man. Right over here. I think I should pay for this premium after this video. Right there, that's a double bottom, right? So since we see the market giving us a double bottom, guess what? This is where we are going to take our entry position and have the tightest stop loss ever. All right, let me take you and show you what gold was doing when I was giving out this heads up. This was July 9th. Today is 11th. You can see July 11 right here, and this is July 9th. Pause the video, try to zoom. This is before she moved, right? Transparent. And you see, yeah, this was a gold swing area. I gave them that, right? And then let me see, then I say, okay, this is when she was playing out 145 pips. She was up 145 pip, right? Then she plays out, and this is today. I think this is in the morning when I said she's up. No, this is yesterday, not in the morning. Yeah, yesterday 7 p.m. she was up to 262 pips. Until then, before we continue, guys, have you hit that subscribe button? Have you checked the link in the description box, my Telegram? Anyway, check that after the video, right? So let's continue. Wait, did you hit that subscribe button? Did you smash that like button? All right, let's continue. Now, after the 15 minutes, now we're looking for buys, right? Entry. Let me take it to the 15. Come on, I'm into the 1 minute, right? I told you guys we're going to take this entry on the 1 minute. And you see the pattern, the strategy that we did have on the daily, that's the same strategy that we're going to do on the 1 minute. That's how we're going to analyze them 1 minute. So we're going to take the 1 minute as the daily, right? Any move that we see on the 1 minute has to be the same as the daily. I don't know if you guys understand. If we looked for inverse head and shoulder on the daily to take buys or to signify a buy, we should be looking for the same inverse head and shoulder or even a double bottom. And if you don't see those kind of patterns, we don't execute, right? So at the 1 minute, guys, you need to be keen. You need to be keen because this one might be crazy. She might manipulate you, right? So yeah, right over here, the first thing, if you see, I missed this entry right here. So yes, I missed the entry, but look at this. This is an inverse head and shoulder, tiny one. Then now she gave out this kind of. Now if you took this entry based on the 1 minute right here, see, definitely you're going to risk 23 pips. 23 pips for your account is good on gold, yo. If you use 0.01, you're going to risk only $2.30, I believe so, depending on your broker and broker spread. You know, compared to risking 80 pips and 100 pips. So, you know, risking 23 is a good one. You know, let's say you have a $10 account, 23, right? So remember, we've done our analysis based on the daily, and now we want to swing this joint. I'm not talking about scalping now. I'm never talking about scalping or day trading. We want to grow and, you know, this $10 account. So risking the 23 is good, but then yeah, let's talk about how this move. I missed that entry, but then here's what I keep on saying: after an impulse, expect correction. Even if I miss the entry, it doesn't mean the market won't give me a second chance or a second position, right? So yeah, she went all the way up, but then will I chase this trade and take the buy here? No. Remember, at the beginning of the video, I say don't take the market at the highest high, let it pull back, and guess what? Give us another bullish flag. Why is this market giving me an inverse head and shoulder? And yeah, I missed that. And then after inverse head and shoulder, why is this market giving me a bullish flag? Those are the things that you should be asking yourself. Okay, the moment you spot this kind of, you know, patterns, you know, add more confidence. And I say no reversal, no trade. Look at this. Guys, tell me if this is not a reversal pattern. Is this not a double bottom? Is this not a double bottom? Let it break. Take your entry. And guess what? You should risk right here another chance, 38 pips. 38 pips. Then let the market do its thing. Let it go. Let's take it back to the 15. Let the market do its thing. And as usual, guys, once you see the market pushing or pulling back, don't kill yourself, don't panic, because we are at the, you know, the right direction. So definitely, you see the reason why I have this rectangle tool right here drawn is because I know that this is the previous high that she created then dropped, right? Then I 100% believe those who are trading on lower time frame, 50 minutes, I was like, okay, this, you know, the moment she touch here, she's going to give me a double top, then I sell. No problem, yeah, no problem. But why will I sell? Why will I sell there? So the thing is, take this as another opportunity, right? Take it to the, in fact, let's just do that. Let's take it to the 1 minute right here. Let's just have this right here. Okay, so we need to understand what the market is going to do at that resistance level. Guess what? If we see a continuation pattern, bullish flag once again, get ready for buys. And before you take a buy, the policy states no reversal, no straight, right? So for now, nothing, right? I'm not seeing any bullish flag right now. This is like a bearish flag. That's why I say, you know, people are going to take a sell, no problem, even the moment they continue selling. But you know, their sell might be the pullback, the bullish flag that we are anticipating. Then we go to the 1 minute once again, and once we spot a reversal structure, we kill it, right? Then that is now adding more position. So this is what the market is doing basically. And let me see how many points are these from the initial entry. 2,296 points, you understand? And of course she was up yesterday, 2,720 points. So that's an amazing run, baby. Okay, but remember, if you took this trade on 0.01, so right now you should be up $20. That is more than a doubling your account. $10 your balance, so you should be, your equity should be, I think, more than $30. If you do not get what I'm saying, guys, rewind this video, watch it slowly. Anytime you don't get a thing, click on that rewind button. Understand? I think that was the easiest breakdown that I've given you guys. All right, so yeah, until next time, amigos, peace.